Hello, hello, hello. Let's go for a Tuesday edition. What's up? What's going on, everybody? Yo, how you doing? What's up? Come on in, folks. Settle down. Settle in. Get in. Get your lunch. Get your breakfast. Get your dinner over in Europe. Get ready for bed if you're in Australia. What's going on? Everyone, get over to Harmonic Trader. That's what you need to get to. And it all starts there. Become a basic member. That's all free. Get all the goodies on the basic members page. All of that, including our software. You guys can try all the software. Yeah, we'll give away some software today. But you know the deal, especially new people. More and more new people showing up, which is great. Building the community here. And get your free Trading View access. 2 weeks, 14 days, that is. HPC at SR-analyst. You send him your TradingView username, you get access, and then you get a whole slew of materials, resources, videos, including the seminar from last month. But that's all in the request email. Thank you, David. What's up, David? Great. Ryzen, AA, Candle Clown, GGH, Art, Hugo, everyone else. Come on in on a Tuesday. Let's look at some charts. Let's look at some harmonic patterns. Some better harmonic patterns. How's everybody feeling after last week? I seriously took time. Like after last week, I would just absolutely kind of looking at things a little bit slower and just saying, okay, settle in, because I think this is how it's gonna be for the next 3 years. We're just gonna have to accept erratic market manipulation at its finest from the White House. No doubt. Guys, that tweet last week, okay, by every definition of the law, was totally illegal. I mean, and I don't care either way, and because our premise is that it's going to show in the trading action through the patterns. But last week was crazy. And I think what happened was people were so uncertain, they were piling on hedges upon hedges, and that was driving the VIX through the moon. Right now, NASDAQ's up a calm, cool 100 points. Was up more, was down more. But I don't care. Just print some green candles. Some green candles, daily, weekly, however you want to bring them. Just bring me some green out of this low. And we got to look at this. You know, I was saying all along that I thought whatever this retracement would be, it would be a lot like August, which was that, and, you know, July into August. And this was about a double August. You know, if the first slide was August, you got the second slide, and interestingly enough, we got an ABCD right off the top here. So what's ever going on down here at 17K for the NASDAQ, we know there's lots going on. In fact, the big weekly number is still the most critical level for NASDAQ right now. NASDAQ 100, 17,838 is the big downside target that we hit. We responded well, and now the only thing I really care about, you want to see market progress from this point, give me a green candle. Give me 3 out of the next 5 weeks green to get us into what should set up as a summer rally. I mean, we should all be thinking that this is the low for first quarter, second quarter, if not the low for 2025. Now, something that's within the pattern framework that we need to look for, and definitely we're already there, is a type 2 return, guys. This is how it works with the patterns. You get the setup, you get the reaction to target 1, and now the return phase, especially with HSI right there. Return phase, we're 19K right now. It should take us to 2673. 20,673 for the retest, and then we'll see. It would be perfect framework, type 1 reaction, type 2 return trade, back up for the final retest. And then if we're going to have something really bad, it's probably on that retest. But my argument all year, beginning of this year, my argument for all of this has been one, retrace. And this was more on the daily, but weekly, fine. I'll take the weekly. We kicked up to the weekly about a month ago, saying we got to respect these levels. Okay. Now, if I'm right about the quote unquote generational opportunity that I talked about really at the end of last year after this retest, it's going to have to be from here, and we're going to have to just go through, smash it on through. Okay? That also makes me think that if this is what needs to happen, then the earnings that are coming up, they might see some phenomenal action. Phenomenal. And I'll bring a couple, things like Meta. I think Meta's down here, weekly getting generated right now, but we know there's a big daily pattern. Guys, we haven't seen patterns in these mega tech in a while. Pretty sloppy. 522 is the number. No confirmation, but there's lots of patterns here. You got Amazon, you got Meta, you got Tesla, all of these. That's not even that pretty. It's still more on the weekly chart. There you go. This is the reason why. This is the reason why daily hasn't been really ready to rock, is because we finally are getting our HSI signal, Harmonic Strength Index, critical. That's our indicator we're using. I mean, I'm sticking to that thing. It has been spot on. And look at the last 4 tests. All right, so that's this week now. There's August, right back here. You go to October. You guys seeing a pattern, so to speak. And then all the way back here in May. That's 5 HSI signals in the last 3 years. Every one of them led to a continuation after a little bit. Most of them were straight off. This was the only one that really, of the last the last 4 that required any kind of major time. I'd say even this was probably the only failure. And you start going back here. You start seeing how rare something like Amazon.com. All right, you want a place to buy one of the greatest stocks on the market today? Yeah, it's starting right here. It's starting right there in the same way it did there and there and there and there and there and there. Every one, guys, every signal of a weekly bullish HSI, you go back. I was just kind of flipping through charts. And, we've been working with HSI for a few years now, but I've got to highlight this. How big of a retracement that is. There it is. 1 and 2 and 3. These are coming like once every 9 months, like a baby. Right there. So being patient pays, and this is how it pays. You line yourself up with this kind of a level. Up here, we are looking for follow through like there and there. I mean, every one of these. 122 up to, I don't know, the peak. 200, that's 80 points. Low to high, 150 to 240, another 80 points. Down here in this area, 103 up to whatever, 140. It's like you're talking with historic precedent. You're looking for Amazon to move like 40 to 80 points from here. And I'm thinking Amazon 230, guys. We can stabilize this week. Amazon can put in a floor around 180, 170. Doesn't matter to me. I was saying that to my crew. Look, if it's Amazon 160 or Amazon 180, What we're gunning for is 230. So we're down in this hole and a whole lot of uncertainty. That was probably a bunch of nothing to give you the retracement, retrenchment, pullback, whatever you want to call it. But I think we're there. And I don't think, listen, the fundamental landscape of the market has not really changed. All right, so you got these stupid tariffs to deal with. We had a lot other stuff to deal with in the last 4 years. So, I mean, anybody remember the fact that oil prices were $100 a barrel 3 years ago? And we survived that, thinking that oil was going to run to 150 or inflation was 8%. It really was. I mean, inflation was riding 8+% there for a while and the market held. So, what's a tariff? Okay, it's just a bunch of noise parroted by people who barely understand the concept. In terms of the market, this is what you need to know. The market is growing. Why? Well, global population will continue to grow for 0.8%. That's 0.8 of a percentage rate. Yes, the growth rate is declining, but global population, folks, is still climbing. Still climbing. And the underlying current of expanding financial markets, growing, increasing market capitalization, international world GDP, all of that does not stop. So within that context, this is why when we get weekly pullbacks like this in stuff like Amazon, you don't screw around. You do not screw around. You turn off the TV and let's get down on the signals, which is really starting to show that this retracement is over. I said it. There you go. You can have it. It's over. Screw it. QQQ, similar kind of a deal. All right, QQQ's always been about that daily. Check out the daily chart, the butterfly that we talked about right up at 537. I mean, it was spot on. We were just looking for something simple, 487. Okay, I didn't even mind 462. But when the thing got down to 406, yeah, then we were kicking it out to some larger levels. I consider that overspill. I just consider that kind of an excessive wave and better for the longer term. Better for this kind of an action to finally develop another HSI all the way down here. What was the other thing there? Hold on. Wasn't there something else? I don't think so. Monthly. The monthly. Yeah, this is big on the monthly too. Like our monthly close is going to be important. We do have a possibility of going bullish for that candle for the month. And if you do, and that's above 468, 467.30, that would be a big deal. That would mean that this whole thing looked a lot worse than it really was. And now we can get back on the business of being a growing stock market. It's it seemed challenging for there was like a 48 hours there that was kind of like what the heck? Maybe a little bit more, similar to August, I got to say that. So, that's the deal. I'm really liking what the Qs are doing, tech stocks are doing. I think like if you're a 401k person and it's a great idea to do this. I mean, you don't have to be first of all, I'm a big Roth IRA guy. Okay? So if you're going to do 401k, go Roth. If you can do it and get the tax-free advantages, by far, it's far superior, even though contribution is less, but get the tax-free angle. But if you're doing that or you're doing any kind of DCA, this is perfect DCA territory. Even if you just said, okay, every time Apple or Amazon sell off 30%, I'm probably going to be looking to buy. That's where we're at. Dow Jones Industrial Average, what a beautiful type 1. I mean, it's just couldn't be more perfect, guys. 37,292 was target on the weekly after this massive 2-year pattern that we've discussed. I mean, it's dead on. So now what? Look for the Dow to go back. And this is all a part of what I'm calling a stealth type 2 return, meaning you have the type 1. First time it hits the pattern right there. T1's generated. Okay, this is the process. We worked through this on our strategy, our webinar last month. But you're looking for the software to generate the T1, then generate the dot. And the opportunity for the movement down to target 1 is after the dot. It's like that. And so you're there. Same way for the return. T1 printed. Why? You hit the level. And not only that, but you have a dot and an HSI. I mean, you've got a couple things going on here where enough already. It's ready to do the return move. And we could bounce around here a little bit, but like the other major indices, we are already, and in a lot of cases, more than halfway through the return phase from target 1 back to the XA level above 42K. So reaction over. How you guys feel about that? Hope you're feeling that, because that's where we are. Yep. Then we get into it. I do think this sets up, guys, what we're looking for after last week. Stabilize it. Maybe we have a consolidation. It doesn't have to be a super V reversal out of here. We can take our time. But all of this sets up for like a summer rally, and that's the way to be thinking about this. Go here and project it out. Where's 30 weeks? Where does that take us? That builds us a window, puts us all the way into November. Not to mention, remember this 30 weeks, which I think is amazing. 30 weeks, guys. Bar 29 was last week. What's that mean? Well, we're always looking for the window. Pattern completes. Great. Project your 30 bars to the right and use that as the reaction window, which it was. And it hit target on bar day or week 29, excuse me. Great. Let's project the next 30 weeks then. Treat that as the new cycle. And so now we're going to be wrestling with this situation. Again, I think you go until late October. I think you'll probably get up there faster than that, but this kind of builds that window to get down. We're going to do a T2 like that. That's the framework. Like the other ones, if it's going to be super strong, we're going to get just a cycle continuation. It absolutely explodes through here. So you're 40K right now. I want to see this thing get back to 42 in a heartbeat. 2 weeks, 3 weeks by the end of the month. Shouldn't be a big deal. And then we'll see how we get up into this top region. Do we get confirmation? Where are we? HSI wise. Framework in terms of respecting the reaction. Work is done. Reversal, come on back. So I'd be playing alongside bias. I would expect short-term reactions, and I would expect volatility. I don't think, and I wanted to show this chart too, the VIX thing, it did spike, and I'm kind of glad to see it down, because for me, that was a one-off. We talked about that last week, where we get the spike. As long as you get above 40, guys, that's usually the event of knowing when you have an extreme. I went through this last time. Also, really quick, like COVID is a great example. that you don't typically get VIX in a trending character. It will spike, it will hit its numbers, and then it will pivot back down, and it's over. Like there's August, and look how all contained within a week and then back down. And then VIX just, as it kind of withered away, the market exploded. I would expect the same thing. We're still riding high at 30. I wouldn't be surprised to see that thing back down at 20 pretty soon. Things calm down, market gets back, you go to recovery mode. But we're up there, and this has only been, you got to go back here, right? You go back the last 6, 7, 8 years. No doubt what happened last week was up there. I mean, it was up there with August of last year, which was kind of crazy. COVID, all right, almost trying to get up there with COVID highs. We had a few in the last 10 years, but again, above 40, you got to start thinking VIX is wicking out. And when certainly we've only hit 80 a few times historically. I mean, a financial crisis, that was loco. We were close to 100. COVID was 80. This was 60, and that's a big deal, guys. That's a lot of exhaustion. Big sign on VIX. SPY. SPY. Still going to be the number one chart for I don't care how long. This monthly pattern, hold on, it's on this one. Take off the adjusted. That's the right one. So this chart, not adjusted. Was it dividend or contract? I think it's contract. One of the greatest type ones I've ever seen in my life. Period. Okay, there was the second dot, and that actually came in December. Completed 1-2, and then by February the breakdown started. I think what's even more significant is the fact that we hit 482.25. The low on the SPY was 481.80. Not bad, as they say. Less than half a dollar overspill of target one. And this is probably going to be the trickiest of all, but we have to keep our eye on 561.48. It's incredible that we're already in the return move. We came down, we hit it this month, and now we're trying to already go back and hit the return move. We've got, happy tax day, by the way. It's April 15th. You still have 15 days to get through this month. But that is kind of the framework, a hidden framework. Like we could slam down, hit target one, and actually come back and kiss the XA and generate the T2 on the same bar. That would be insane. That's where indicators come in, and look, we're deeply oversold. We'll actually get a pivot next month. I mean, this is it's pretty remarkable. Absolutely. You're right there at the like 11.3. What's going on over here, guys? What's up, chat? No, you're not that guy. What's up, not that guy? Great to see you, everyone else. Myself, Nanny. Please help Darwin. What's up, Darwin? You guys are, what are you guys doing here? You guys are busy in the chat today. What's going on, everybody? I'm riffing. I'm not really looking at the chat, but, yeah. Am I the OG of harmonics? I think so. What's up, Mr. Garcia? You have a question. The trial for the TradingView software. Is that the same one you'll be purchasing for the annual membership? Of course. Everything is included with the software. including the resources. Okay, just to be clear with you guys. Just go over to harmonictrader.com. If you guys have any questions, just become a basic member, submit your email. I'm not even marketing to that list. Okay, but I collect the emails, but all of it starts there. Check out all of that information, please. That's the place to go. And then the other thing that, just so you know, and if anybody's here that's interested, let me show you. This is what we send you to. Okay, here it'll be like this. You'll get an email from me, and it'll be all of these videos, resources, everything. Okay, just so you know. If you guys have any questions, again, I'll put it in the Discord. What you want to do is email me, or actually DM me on the Discord. Okay, put that Discord link in, and then you guys can sign up. But that's the place to connect with me, on the Discord, especially new folks. I understand there's a lot to digest here, guys. That's why we do it the way we do it. The regulars that have been here forever, they're the best. We got a great community of people here. What we're doing is basically employing the framework of harmonic patterns, pinpointing levels with confirmation to understand direction, natural harmonics. Right now, the direction is up. It's up to the retest. Hope that helps. That's really what we do. Okay, and more it's been kind of a recitation of what the software is kicking out to help all of us get in line with the framework. 482.25, we said last week that was the number we had to stick, and we stuck it. And now we're back for the return test already. Let me DM me with further questions, okay? What's up with confirmation on Bitcoin? We'll get to that in a second. Yeah, there's confirmation on Bitcoin. We'll get to that in a second. What's up, Cameron? He likes the VIX idea of buying stocks when VIX drops under 30. Yeah, and I would think it's an exhaustion signal with VIX. So VIX is peaked out, and what do we know? We know that the type 1 reaction has ended. It ended. It ended a week ago. Last Wednesday, I guess. What was the low? Pretty crazy, right? The low was last Monday. Seemed like last Wednesday because of that big retest, but they had to come in and retest it. So that's the plan. Our directionally, we did a great job this year. But as I was looking for this retracement move to set up the rebound, so no doubt, I mean, just because we went deeper than I thought doesn't mean we're not getting the big rebound that will take us to new highs and beyond, because that has been the 1 to 3 year strategy. We did that beginning of the year webinar right around January 2nd or 3rd. And I said, yeah, guys, this is what we're looking for. We want these big weekly, monthly patterns to have their retracement and then get oversold and then do this kind of a thing and keep going. That's why stuff like SPY and QQQ and then the big ones, Amazon, Meta, even like Tesla, setting up off of targets to try to go do the return move. They're just taking their time. That's weeks. You've been down here at T2 for 4 weeks at 250, 249. That's the number. Even though we were as low as what, 215 or something aftermarket. So we're looking for that turnaround phase, end of the retracement phase, and get back to market appreciation. Here's HSI firmly out on the weekly and amplified. Both of those, this is Tesla, guys. Okay, great follow through in terms of indicator. Now, just spend this week going a little bit higher and get above there so that we can really then get going where you're down here at target 2. This is still the plan, still the return plan to 444 on Tesla. You're 250 at the moment. I'm looking for 444. That could take a year. You could take 30 weeks or more. I don't think that's crazy. You're down here. There's T2. There's HSI. I mean, a rough 30 weeks puts you into November. So I'm closely watching that. But I think everything has played out the way it needed to. Do we have a dot retest? We have no dot. Don't know. We got to be patient. And this is where I think my understanding of how price action plays out against the patterns can help you folks. Because it's easy when you go day after day, week after week, and you're like trudging through and it's like, oh, wait a minute, I got to wait 30 weeks for this to happen? Yeah, that's how it goes. That's our job. Our job is to recognize where we are in time, okay, line ourselves up with the framework and position ourselves with that kind of an idea. It's not guaranteed, but that is the 1-2 framework at hand. And you have bullish patterns here too. Remember, you have daily bullish patterns. You got this bat pattern right off the top. Can we get out of this zone? I was concerned like 2 weeks ago because we had that counter signal. That was the end of March, and it drove it back into the zone. But what happened? That's all it could do. Big bullish engulfing. We're looking for a type 1 to 348 on Tesla. Come on. Bullish pattern, weekly target, weekly HSI, daily, weekly stuff trying to push above the 50. Okay, and all in the biggest of companies, Tesla, Meta, Amazon. What about Apple? Is this a time to nibble on Apple down here? Don't know. We got to look at 185. Can we get a retest? A really stealth retest to 185? Because that would be the perfect type 2. There and then go. So imagine that. Imagine Apple at 185. It satisfies the pattern. It gives you a type 2. That's the kind of thing I would want to look for. If I'm a long-term, super long-term investor looking for the next spot to jump in on Apple, it's after the retest at 185 or lower, expecting this to be a major low. I mean, you're really looking at Apple like this. It was 250, 260. It got to 170 pretty quickly within 3 months. 3 months. That is remarkable. You're talking 30% decline. That's what you want, right? You want the best stocks on sale. Now, can we get the type 2? Because from the harmonic pattern framework, that would confirm all of this stuff, all of this trading at 174 to 185 to get ready to send it off of that low. And it would be T2 where you're going 185 to 225 and beyond. I mean, again, you're looking for that thing to pivot and then go from there. A lot going on here. I mean, look, last week was kind of aberrational, no doubt, historically. But last week's over. Let's get on with it. Definitely. Can anyone answer that purchase the software? Answer my question on the top. Yeah. It's the same one. again, and that's Mr. Garcia. Definitely check it out. Just take the trial, guys, and we serve you up everything for free, and you get on with it. That's like a real fundamental thing for what I do is that we're going to cover harmonic patterns. I'll show you the details, but like any methodology, anything to do with trading, it's a self-taught endeavor. You're ultimately going to have to develop your own mindset, bring your own strategies. You're going to have to measure the market and then ultimately make decisions for yourself. The easiest way for me, okay, is just to give you guys this free trial and give you access to all of the materials and then you to dig in and then join us. We're here Tuesday, Thursday, guys, 12:30. So hit the like, hit subscribe if you're enjoying what's going on. We had a great live stream last week with Mitch Ray. Always great to talk to him during the craziness. And again, I really feel like we've gotten through the worst of what needs to go down. You can go through a lot of these big tech companies. Here's Dell Computer, and this is another one where, okay, we're back under the 90 level, 91.80. We did clip 66 without confirmation, but now I'm really looking at Dell in this lower region for that to be the end and this to literally be the start of kind of a next wave higher off of that low. Still early. Weekly looks like this for Dell. Okay, looking for this essentially to stabilize that general 75 area. But another one, okay, 50% more on sale. We want to look at those. Nvidia, all the big names. All the big names produce patterns in the last 3 months. Daily patterns. Nvidia down here, 93, it hit it. You're basically looking for that. That's the low at 93. And then come on back and do the 1-2. At least, you're 112 at the moment. Back to 123, 124, I don't think is difficult. If anything, you want this bat pattern to play out and then continue to make progress higher. Even though we're beyond this channel, that's the other thing I mentioned. It's kind of like we have to look at that channel as like an overspill. Certainly that is it for the pivot point for the long-term trend, but here you go with Nvidia, and we've seen it a few times. Look, the last patterns were back here in 2023, and we had some in 2022. Every time that was a major low support. And I don't think this is any different. 106.90 is the exact number. You got to be liking these. Good, I hope. Look, you want NASDAQ to retrace. Come back, retrace this territory, and then get ready to go. We'll see. Cameron said he did an overlay of the current market with 1929. He said that puts something out till November for a major retest. Maybe, why go? Why is this so significant, more so than say COVID? Or why was this perceived? What's going on with tariffs perceived nearly as extreme as the COVID situation? Because that's what happened. And I think it's overdone. I personally think what happened last week and the level to with which you saw like the biggest point day ever and historic volatility, point movement in a day. We've never seen stuff like that. Not like thousands of NASDAQ points in one day. That's at one point last week, You know, we traded more in a few days than the whole 2000 crash. So it's definitely whatever that was is overdone. Here's the other one, Broadcom. Okay, guys, big names that we got to look at these as potentially already bottomed off of these patterns. Look, Broadcom, one of the best tech, period, semi plays, period, next to NVIDIA. We're at target one, so that's done for now. I mean, for now. Are we going to get a retest for the target two? Because that would be ideal. Target two and then go. They're not all in the same position. You know, something like Dell Computers already retested, or some of these daily patterns in Tesla, Amazon, they're still developing, but at least you have a lot of prints. Sometimes it's when you're ready to trade, and believe me, I know this from experience, and there's no patterns or whatever, you just start clicking buttons. Yeah, not a profitable endeavor. But that's why I always say line them up. Last August, we had a similar bat pattern. We didn't get to T2, but the confirmation, kind of that secondary, came in months later. So similar spot, but you know, you look at Broadcom, you look at all of these, and it's a massive retracement within the long-term uptrend. And I would say the same goes for Broadcom. And I think Broadcom needs to be in the conversation with NVIDIA. It's like that. And those railroad tracks will continue to go. I mean, look at it like this. This is the path Broadcom has been on for several years now. And the general path, we should see this thing continue. All right. That's how you get higher. That's how you go forward like that. This whole assumption, you go back again, 2022 low continues. Nanny, I'm just getting caught up now, man. You need to DM me, okay? Hit me up on the Discord, everybody. Especially if you have not won the 30-day package before and you'd like to win, you got to hit me up on the Discord, all right? But you have to be the first person to type in HPC30, and we'll give you away that 30% 30-day package, 30 days to the software, 30 days to harmonictrader.com. If the tariffs end up sticking and slowing down the world economy, it would be significant. If they don't, then there might be some cash returning to non-US countries. Yeah. Ultra Spark 1, you win the 30-day package. We'll give away one more. But you got to hit me up. Send me a note, DM me on the Discord, please. All right, hit that link. I just posted it as Harmonic Patterns. Okay, and that's not a bad comment, Mr. Cameron. If the tariffs end up sticking, well, they're obviously not sticking. It's all talk. It's all threat. It's all, you know, empty threat, quite frankly. You know, how much of that did they pull back on like within days after announcing it? That's it. You know, and that's why if this was it, if last week was it, and it was finally the end of the correction, whatever, then that's the maximum damage this story, this narrative is going to have on the current market trend. It's just taking longer. It went lower, but now we turn around. You know, we're going to have retracements. What are we? Okay, we're back to even on the day. We're rolling over. NASDAQ is now plus 5 points. It was up 100 when we started, and S&P is off 8 points now. I don't care. I really don't. I'm looking for dots. I'm looking for confirmation. I'm looking for even smaller patterns, 4 hour stuff. Trigger me down here. Trigger me down there. There's a 4 hour pattern on Broadcom. Yeah, same as the daily. I don't think this is, last week was a lot of noise. The last month was a lot of noise. Beyond that, not so much damage. Real damage, no. What was the other? There was one other one. Well, I think the SOX index. Why the SOX index? Because the SOX index really was the early sign, and I bring this monthly chart up, just like S&P. It already went through the 1-2. Another big setup I talked about last time. Did the type 1, did the type 2, holding now. There's the 1, and it already did that type 1 way back in August. And then incredibly, we did this rally into November, December, could not break to new highs and started rolling over immediately. That was the top. Hit target 2. Now, so again, we're super early, but I have to highlight this as probably the most important subsector of tech where you're looking for this to pivot in the next 30 days. Pivot out, that's it. 35.57 is it, guys. The low was 33.88, and we should begin to resume the semiconductor long-term trend from here. Still early. I need to see another probably 2 or 3 green months to really get the momentum of HSI turned around, but early stages are there already. I want to be looking at these. Pretty remarkable run. Look at that chart. Look at the pattern. But if this pattern is only going to give us a 1-2, which I think it will, I mean, if we were really going to crash, folks, we'd already be under target 2. We would not have responded the way we did. So we go into next month keeping an eye on it, but I think you're keeping an eye on the SOX for the move back to 52.90 or higher. So it's a pretty big rebound. I know it looks like garbage at the moment, but there's a lot of reasons to anticipate that turnaround. Yeah, look, tariffs will be dismissed, Crypto Sharknado says, but it won't stop prices and revenues continuing on with inflation. Look, the inflation thing is a crocked up story. It's all because of crude oil. Okay, there was several things that people did in the last 5 years that took oil unnecessarily to 100, and now we have stalled for 2 or 3 years. We talked about this. Crude oil should be back at like a 40 handle, guys. Crude oil, where it is currently, has been held up. If it was going to continue, it would have. I mean, we would have gone right back to 100 and stuff. Well over 100. That didn't happen. And then check it out. We're here at 60. Our numbers are like 40 something, 30, 31-ish would be the type 2 retest off of the deep crab. So I think the whole inflation story was it was kind of a couple of events conspiring to keep them artificially elevated. You had the sink where you went negative in COVID and then right back to 100. That was pretty crazy. That was super crazy. For us, it was a perfect pattern. It was a type 1 deep crab, whether it was negative or not. I mean, I don't want to get into the details of how do we justify negative crude prices, it's a long story, but yeah, that's real. And the type 1 is real. And now we're having just this slow meltdown rollover where the retest is actually 31.62, guys. I know that sounds crazy. It's like half price of where we just were. But that's where this thing is getting pulled to. And I don't think, look, crude oil, I think once it slides under 50, there's nothing stopping this thing from, really getting hurt, which is, you want inflation down. That's beautiful. You have, you have this hop level, retest the bat from back in November. So, relative recent history of about 18 months ago, that's where we are currently. But inflation will come off, and it will come off like those government statistics, guys. This is going to be delayed and reported, and that's a big deal. 70 down to 53 is a huge drop. You will not see that in the official numbers until next month, but that will create kind of a domino effect. We can take the premium out of crude, then yeah, you're going to see inflation back to 2% or lower. Imagine if inflation gets back under 2% annualized. Rates will drop, and they should be dropping. Now, I think even the rates at 4% are ridiculously high. There's no inflation in the system, guys. There's only one place for them to take this that's lower. Take the rates lower. All of that is great for paper assets, especially after a 20 to 30% correction. That's where we are. So if it's going to fall over, it's going to roll over, let it happen. Let it fall. Bring it in. Nasdaq's only down 10 at the moment. S&P's off 1150. But I think this is really constructive, and even though it was worse and longer than August, there's a lot of things going on here that are a lot like August, and you have lots of patterns. Remember Target? We're still waiting for confirmation, but you have a lot of patterns that look like this. Massive type 2. And that's the kind of opportunity on a weekly chart I would be looking for. NASDAQ just bounced back, just bounced 30, 40. We're still getting those crazy 30-second movements at times. But I think soon the market's going to realize where we truly are. I mean, narrative is going to realize. Narrative is usually the public at large or the media, and be like, oh, we're not going into a bear market, so we shouldn't freak out. And if anything, I see patterns like this, I want to be buying. I really want to be looking at as a perfect type 2 here, retesting. My only question, is it 92 or is it 65? Where's confirmation? Deeply oversold still. So this is where waiting. Can we get that out of the oversold? It might take some time, but you're really close. Please be thinking this. Don't be surprised if you see more volatility, more pullback, whatever. But overall, I think what transpired last week was a once in a 5-year, if not longer, type of event. Once every maybe 4 or 5 years, and it'll blow through like a hurricane. And then we clean up, and then we get back on with it. Absolutely. GGH thinks we're in a broader bear market. Look, I will say we're in some kind of, and you should define broader bear market. What does that mean? 50% all-time correction? 60%? Normally, we don't drop more than 40% right off the top. So a generic 40% haircut off the 600 high on S&P takes you down 240. Okay, takes you down 240 points right off the top. That puts you around 360-ish. And that would be a 40% generic bear market. Right now, you can't say that because we just finished the reaction. And the framework, the ideal model says retest me now, 561.48. So we're in, if you're thinking we're in a bear market, we are in a counter trend rally, but I'm not of that opinion that we're in a bear market. I think we went through a nasty hard correction, but that's it. A retracement that was a stiff correction being 20%. Basically hit that number and we turned on a dime. So 561, guys, use the SPY, track the SPY every day. When we get up to 561, I'll take a hard look of what to expect. We're not that far off. I mean, it's amazing to think we rallied. There's the low last week at 480, and we were as high as 540. So remarkable, 15% or more off the lows already from here. 483 up to 545-ish. It's something. So be aware that that was severe, and it's probably over. You're looking at this 5-minute chart. And what I notice here that is a little different from the last few weeks is we've had 5-minute patterns, but they give you the reaction, then the reversal retest. Reaction, retest. Reaction, but they're climbing higher. I like it. I really do. 530 is the next downside target for SPY. But we should continue that type of progression. The 29 market retraced 50%. I think it did more than that. The 29 market was down like 87%, I think, from high to low. That was the all-time. And then the second to that was NASDAQ, 2000, which was 84. And that was really nasty. But that was nasty because there was so much garbage. So many stocks, so many .coms on NASDAQ that it was, not a surprise. Yeah, I hear it, guys, to be cautious, but for right now, where we are within the framework says we got to do this return move first. So cautious where? Cautious if you're shorting. I'm looking for return move to 561. Like target one reaction, that was over a week ago. That was over last Monday in effect. Justin says the Trueflation website shows 1.4% inflation rate as of today. I would agree with that. Yep. Market, what's up, Freeze? He's saying market is illiquid. Any big trade will move one way or another. I think that liquidity was in question last week because you're seeing big moves, 100 points on the NASDAQ within a minute type of deal. I would like it to calm down and start the building process, please. What's up, Art? Is what possible? Art's asking. I can't see that, man. Let me know what you think there, Art. You agree with not being in a bear market, but due to the gap seen in SPY, not enough fear was induced on the selling. Art, I'm going to disagree with you there because some stuff like The VIX, great reading. Also, the fact that flat out you cannot dismiss the big targets we hit. It was a massive event. Think of this as a big technical event. 482.25, guys. We don't get that back. Okay, that does not come back too often. It was such a massive test and rebound off of that level that it's significant. Didn't spend much time down there. We were around 482 for only a few hours. But that was part of the thing here, guys, of why I'm just saying reaction. I'm not saying bear market, is because not only did we do the move and we hit target one and we hit it so close, it was almost perfect, and we have HSI, but you're seeing what's going on the first 2 days of the week. If this was truly weak, we'd be back down. We'd be like 507, 510, something like that. Nope. We're holding up here. Can we print a bullish candle this week? That's above 544. And I would be looking for that. And that would send us right back into the zone. That's the framework in action. Yes. Sure. What's up, Claire? How are you? Today, she wants to look at the dollar index. Yeah, we can look at that. Euro. We can look at those really quick. I'm just kind of bouncing around. I'll get to Bitcoin in a second. I mean, the DXY is probably good to look at. That and that should help Bitcoin. It really should, with the dollar dropping. So denominator in the BTC USD formula is getting smaller. Then the numerator, the BTC price, should start to increase. I mean, you're here. Dollar dropping under multi-year lows there, under 99. It's a big deal. But it's more about what happens after this week, because you have a bullish dot and you go to those lows. Okay, what were those lows? Well, there's the low back in September, corresponds with an important low. You go here, go back to January, beginning of last year. Yep, we had a market move up into those corresponding months. You go back here to July 23. Yeah, you had that move too. So you're set up, you got a dot, a whole bunch of stuff down here where the dollar index, if you're looking at that relative to the markets, we're probably done the move where it's washed out and then go risk back on. We've moved long enough, far enough in that whole process. Dailies like that, kind of an overrun bat pattern. It's it's not the smoothest of chart examples, but it's real close. I mean, there's just a whole bunch of stuff down here, right? 99 to 100. 99 to 100, big support level. And looking for that rebound recovery move. That would also help kind of confirm overall market condition, something like that, and the VIX. And all the bullish patterns we see. This stuff will take time, but it's starting to turn. Is the DXY a monthly BAM, bat action magnet move? It's a good question. Who said that? Alec. What's up, Alec, Louisiana? Is it like this? I mean, there's the monthly dollar index, which is a type 2. And that's above 105.50. Did you got that? Are you, that's what you're talking about, DXY, or yeah, that's the index. I mean, that helps the situation too. Yeah, 105.50. So, again, we're looking for rates to fall. We're looking for the dollar to come in for sure. 99 to 100 right now is short-term support, and we know where the real failure should begin. It's under all of these levels. It's under 99. So if you're looking for that collapse, quote unquote, it's after we break 99. Yeah. Meanwhile, gold, just unbelievable stuff, right? 32.50, guys. So this is where things get really interesting. And I'm just trying to nail this down of, is it now or is it the end of the year that we go to 4,000? We're 32.50 right now. Doesn't look like it's going to stop. No dot, no nothing. I think we're going to probably rally 50 bucks more, get to that 33 target, 3,300, and then we'll see. But gold more and more just looks like a straight shot to 4,100, which is an insane call. It will be gold to here, guys. It's a 2618. It's a whole bunch of stuff, but this is, I mean, we see it. We already see this kind of a thing where your X, A, and actually that B point, that's really makes this a crab pattern. So it should be like this, where there's 1618 blown through at 3K. Our 1902 top end is 33.50. That's, look, for right now, you're going to continue to rally at least another 100. But if something goes super squirrely and we just explode through that number, then that's telling a different story. That is telling something where, okay, maybe rates are going to fall, and that's how people are anticipating that move. But gold, we've been on top of it. We've been talking about 3,000 something for a long time, and now I think we have to jump and possibly consider that what's happening currently blows on through. We bypass 3,300 and we go straight 2618 extreme advance like there, and that's how you get above 4K. So between 3 and 4K, there is really not much to go on. Another good sign for paper inflation. You want paper assets to go up. It's usually led by a kind of a big gold cycle. A lot going on here. 4K by Christmas. You can see a pullback to 27.50. I don't think so. I'll tell you why. We had that pullback. Who was saying that? What's up, Crypto Hammer? We had this. Remember this? We had that counter HSI right there. Send it right back into the zone. Are we going to fail this and just obliterate this? That crab pattern above 32.65. You don't look back. It's really quite an insane run for gold. It really is. I mean, I would love to see 27.50. I just don't think you're going to get it. Even if we had this pattern to go on of the last few months, this deep crab, if we were looking for a retracement, maybe 29.13. Maybe, but I don't think so. And the way, I mean, look how strong this has been. Again, put up there's the pattern. The easiest assessment, ask yourself the question, where's the pattern complete? There. What's happening in that 30 bar window? Takes you to April 28th. It did kind of a reaction, but now we're right back and we're actually up at new highs. That's quite strong, usually leads to a continuation breakout. Maybe. Big stuff, guys. The gold thing it's a big move. And it's kind of interesting because gold's moving one way, crude oil is moving the other. So that's different. Back to crude really quick. Slightly different motivations there. Crude oil is 61.35. Okay, we're down easily 20%. This year, we're down 20%, guys. That's a lot. But gold's up 20%. How's that if inflation's supposed to come off? It's supposed to. Keep an eye on which breaks first, crude oil or gold. Because I think crude oil is a 50-something creature. It's not 60. I think it's probably back down here like 55 or 52. Bat pattern at 51.92. It's somewhere down here. And that will take time, but that also will get into the economic data. And then people will they'll finally admit, they'll say, okay, yeah, or the Fed, speaking of people, they will finally admit, oh, okay, yeah, it looks like the inflation's tailing off. Maybe we can cut rates. I mean, they're so late to the game. It's a joke. They're artificially keeping rates higher. That is the truth. Where's the 2-year? 2-year, 10-year. There's a 2-year, 382. Okay, that should be down here at like 340 or less, more like 3%. And that's only the 2-year. 10 years like this. Hold on. 10-year, yeah. That's the price. Let's get the yield. Yield's critical. Where are we? 4.3. To me, that's astronomically high. Artificially high. So I still say we're up against these kind of last ditch resistance. I would be really surprised if this is above 4.8 again for a long time coming. I'll keep an eye on it. I mean, a lot of people are talking rates now that have never talked about rates, like it's a big deal up here. But we've been up in this area for 2 years. 2 years with this stuff. So what happens and what we want to see is the rates come off, and then that just triggers a fire rally. Rates roll over where they should be, which is like back at 3. In my opinion, rates should be like down here 3.6 now, and then make your way back to 3% eventually. Not go higher the way people are talking like they're going to go to all-time new highs. That's not what I'm ready for. A couple more. Carthago. Come on, stay away from those lizard people. You know better than that. True. Next week, liquidity will hit markets with the Treasury as well. Maybe. I don't think the Fed's doing the current administration any favors, nor do they want to. So you are seeing this trade relatively free from Fed, Fed buying, fake Fed buying, and fake rally. So that's part of the market that for me has always been interesting, where it's about the strongest participants. And even if you get people sidestep, get out of the market, okay, they say the market's changed, it's going like Buffett's getting out of the market because he thinks it's overvalued. Great. There's plenty of other people that are willing to come in here and buy these assets, especially on current discounted prices. Are we going to absolutely go and plummet and do a 40-50% retracement correction on the indices? I don't think so, especially with the amount of money that's out there in the world. Yep. Couple more. Let's go to Bitcoin. Speaking of all this monetary policy, hold on 1 second. Anyway, Bitcoin, guys, what's going on? Doesn't seem like a lot of fun, but we have really clear pattern. This thing at 77, and on every data feed now, we have the type 1 hit. If we didn't hit last time, we recently hit. So 76.4, 76,000, that is absolutely the number. I've been saying that quite a bit too. 76 is important going forward. You do not want to see this thing under 76 again. That should be it. We're already in this 30-day window, and it doesn't seem like gangbusters, but look, go back March 11 and 30 days was here. So we had a reaction, a retest, and now we're back up. That's okay. It's not great, but we need to see some kind of continuation. 3-bar breakout, bullish engulfing. And can we finally clip 89? I think 89 is the number I really want to hone in on for now. I think we can make a run. 91 was the key number I was looking at. So I'm really watching this closely. The other thing I want to point out with Bitcoin, because this is leading all of the other indices, that now that we had that retest, okay, because not every data feed actually hit its target 1 on the first run. There was the first test. On this one, it did. On a lot of other ones, on like Coinbase and other major platforms, we never got to 76.5 or 76.4. Now we did. So against this pattern, we should see ourselves go back, retest 85.8, 86, get pretty close to there. Actually, we were there. We did hit 85.848. And depending on some of these others, let me go a couple of the other data feeds. This is like S&P and the NASDAQ. I think it's really critical we watch this as a harmonic thing, harmonic phenomenon. Okay? Bitcoin, like a lot of them, had bearish patterns looking left. And it took their time, but they did target 1. The thing that I'm going to watch for, do we come back and hit that XA in a real stealth kind of manner to where the T2 shows up? Like, by definition, some of these are T2s already. Some didn't fully get there. Like, there's this is the index. All right, were we there? Because there it has to hit T1 first and then come back and retest that XA level. That's like 89.6. We were so close. So the big test for me still 89-ish, maybe 90, but that would be about it for right now. Certainly squeezed. Can't expect much. Really can't expect much until we get through that retest. I think 89. Beyond that, I don't have a heck of a lot. And we're still in between here. The other one, let me see here. ETH is on death watch. And ETH is down here at 1,600, guys. You need to see something come out of there. I don't like it personally, and we talked about this last time, where Ethereum is deep down here. If you don't turn around, if you don't stabilize, and we just keep going. The only thing here is a full reset, 886 of the swing of that last rally. You come back and you do a full reset, and we don't even have the proper M formation. 886 is there at like 1230, guys. 1600, not a big deal. So if Ethereum's not going to do much, or it's going to need more time, I can't expect too much from the rest of them. Yeah. Stellar Lumens, XRP. Yeah. Look, I added some XRP or XLM. I didn't add any XRP, and I don't like it. Like right back down here, the XA level, hop level, I added more off of this pattern. But this thing is not reacting, and I'll go to XRP as something that, at least there's a pattern in XLM, but it looks like it's failing. XRP is a little different. Every time they throw it under 2, they manage to bring it back, but how many times are they going to be able to do that? I wish I had a pattern there. That would give me something to sink my teeth into, but I think I'm going to have to wait on that. Why don't we come back on crypto on Thursday? It's just not the best setup yet. I like XLM. I like Render. Remember, Render is probably the best pattern out of all of these. Type 2 weekly, daily patterns, weekly patterns, type 2. But we still have plenty of time before that really does anything out of that zone. A great setup, no doubt. And 2 weeks ago was probably the ideal, right at $3. This week, we're finally getting above the 50. I mean, this has got it all. The only thing that needs to happen is a little more acceleration. And these indicators will lead before price. So if we get that on amplified and another week or so above the 50 level, by definition, yeah, we should have something that could make a run to T2 from $354 to $970. That's your T2, but I still say it needs a little more time. Yeah, I think all of it went to BTC. Yeah, Craig, we can look at Doge, and I did this last time, and I don't want to spend much. 12 cents, my man. 12 cents for Doge. 12 cents because it's the 886. There's a bat. There's a lot of things that need to be retested. It might be like 12.7 cents. But that's what we're looking for. It's like this. 12.8. And again, Doge, like a lot of these, you need many weeks of green bars before you could bottom out. I mean, in the same way that Doge was here back in April, we could say it was there a year ago in July and still didn't give you a dot until September. So you went into that 2-month sideways consolidation. I think Doge is doing the same thing. You go to 12 cents and change to work this all out. Yeah. Let's come back on the rest of them on Thursday, all right? Yeah, it's been good. I'm going to get back to it. Markets are kind of flat, but so be it. Glad to see this. Let's just chill. Let's print some green bars. Guys, come on back on Thursday. I'll do some more software then. You guys have any questions, get over to me on harmonictrader.com, please. Send me a note, Discord. People, person that won today, please hit me up over on DM. Everyone else, get your trial, get your resources. If you have any questions, you can hit me on the Discord. Okay, come on back Thursday, same time. Thanks, everybody. Have a great one. That's what I have for today.